we have a very warm round of applause for the record-setting Finance Minister Nirmala Sitharaman. She joins us, ma'am, and we're absolutely delighted that you're here. Thank you so much for taking out time. The context for the NDTV Profit Conclave happens in a setting where India and the United States have just announced a trade deal, the joint statement put out. As Finance Minister, if you were to look at, say, growth numbers for this year, now that you've got these positive tailwinds that are lifting spirits, to what extent would you be willing to revise GDP growth numbers? Because you've got now this very strong tailwind, because earlier it was dragging growth down. Do you think this acts as a trigger for growth? And is that something that leads you to potentially raise the estimate of how fast you think the economy will grow? That's what I picked up from the Chief Economic Advisor. He was saying like 0.4% tailwind on account of the trade deal. What's your sense as Finance Minister responsible for our economy about how the trade deal impacts your vision and outlook towards the economy, ma'am? Welcome.
No, every trade deal is important, and it certainly lifts the spirit of the exporters and people who are looking for newer markets and so on. And if the Chief Economic Advisor has given you a number, go by that. I normally don't suggest any number. We work for it.
Interesting. You know, that's the other thing that we've seen, ladies and gentlemen, in the last several years with the Finance Minister and her top economic team, a conservatism when it comes to setting projections and growth numbers. Is that deliberate? Because one is to aim higher and then, you know, constantly try and chase those high targets. The other is to be conservative when you're setting targets and to, you know, delight on the upside. So is that something that you're trying to do deliberately?
I try being realistic. It may be perceived as being conservative, but I think there are areas in business and commerce which can err on the side of being conservative. Banking, finance, these are areas in which you really can't be too flamboyant, or you cannot be too over-ambitious without realizing where the facts are. So if I were to assess the numbers I've given all these years, I would say I've always been realistic.
Ma'am, just wanted to understand, with this tariff deal in place now, we got some certainty here. Is it a bit perplexing or confusing for you that with the kind of growth number we're estimating and we're projecting, still we are seeing the FIIs outflows, anemic FDIs, I would say. Is it confusing for you?
Fund flows internationally seem to have more than just the commercial considerations. Economies are doing well. You have some economies doing really well and sustaining their performance over the years. Then you have every such indicator which should draw funds towards it really being on an uptick. Even then, the flow is not a flow. Sometimes, I wouldn't say it's a trickle, but sometimes it doesn't flow as much as you expect them to. So I strongly believe, and there are many who would agree, and there's very little reason to suspect that this particular assumption is wrong, or this particular not assumption, my conclusion. Fund flows have more than just the commercial interest in their mind.
So you're saying fund flows are as political as they are economic?
Strategic interests also seem to be one of the very important factors. Otherwise, the economic survey was right when it said every macroeconomic indicator for India is at its recent best. And it's been so literally for the last 4 or 5 years.
Can I counter argue to say, because my batchmates who are investment bankers in New York or London, and even if they're of Indian origin and very bullish on the Indian economy, and I ask them, what's your outlook to India? At this time, India doesn't have much of an AI play. So that's one thing which holds flow. Secondly, the rupee has been depreciating versus the dollar. And by the time they take the money back, because for them, it's about how much returns can they generate sitting in New York. In that context, they're upset still with the long-term capital gains tax which is imposed, saying that that impacts to some extent they feel their outlook to India and the depreciation of the rupee versus the dollar, and the fact that India, in their view, doesn't have much of an AI play, which is where a lot of the funds are going at the moment.
Rahul, I don't deny whoever has given you this assessment. It is probably their own assessment, and they perhaps deal with their funds with these factors before them. But there are equally big fund managers and people like JP Morgan who come, their global head who comes to India and would say probably not what they have said, and they would say India is the place to be, India is the place to do this, and so on. Now on the AI play, I'm not convinced about that, because AI for every country has its own little calibration. Over and above the AI which is globally required, we have the manpower which is absolutely at it, at a high end. We are trying to give that kind of an exposure to AI even for the young fellows who come out of the college or from higher secondary, each for their levels. So on AI, I'm not sure, probably excluding China, I'm not sure if there's any country which is gearing up its manpower to be adept at AI as we are doing. And I can say this with a sense of confidence because you hear it from people who are looking for talented people who can be at various stages of AI.
No, their concern about the public markets is the lack of an AI play in terms of because a lot of the funds have gone towards the big companies which are at this moment building the data centers or the chips.
It's money coming only for AI. Come on, Rahul.
A lot of the flows have been in that direction over the past.
Never mind. You can always score a point on that. But I think India has still a lot of macroeconomic factors based on which till 2 years ago fund would come. But after a certain tightening up on certain other considerations, inclusive of sanctions which are happening, where tools are getting weaponized if a country asserts its sovereignty.
I think that's a very important point the finance minister makes. And of course, sitting on the sidelines of a match and doing commentary is the easiest thing for you and me. But once you're in and that's what you pick up, that's very important. The fact that flows are not just flows.
I'll add to it. Countries like Canada, their pension funds. Countries like Norway, their sovereign wealth funds, and so many others have been in touch with me, and I am actually being invited to go there, and I shall be going sooner. Are they also not affected by the AI consideration? They shouldn't be calling us at all. So different reasons prevail for different funds, specifically in the last minute, to say, all right, I won't go to India or I will go to India. The larger consideration is the return on your investment. India does give it, and that's why many of them booked their profit and went out. And you would naturally assume that return on investment is the primary consideration on which money flows.
Of course.
But no. So what else is there? Something beyond it.
Kahani mein geopolitical twist. Okay, I want to take a question from Tamanna Inamdar.
But I want to ask you a question from the domestic market point of view. There were lots of hopes for some kind of relief on long-term capital gains tax with the thinking that it may not happen. The STT increase did see some reactions from the market. Just want to understand your thinking, because when there have been increases in the past, people have still continued to trade in large numbers. Is this truly prohibitive, and will there be more action going forward if you want to control this satta, as you called it?
I'm not sure it will be prohibitive. But that doesn't mean I'm indicating that I'll come with more. Not at all. But if you look at it, I have not touched anything other than the futures and options. I'm not indicating I will. I'm not touching anybody. And the reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. And it's not going by anecdotal examples. Even SEBI in its study found that 90% of them who engaged in futures and options lost money.
Ma'am, can we engage in a philosophical debate on this? I see where you've come out on this debate, that by raising STT, you hope to deter active participation by small day traders in the futures and options segment. Fair enough. The counter to this is, these are adults, they're spending their money, they'll burn their fingers, they'll learn their lesson and they'll back off. By government intervention of this form, you don't necessarily impact behavior. That, for example, they'll find other ways. We saw this with crypto, multiple other geographies, VPNs being deployed, the same purchases in cryptocurrencies happening outside the Indian geography. So the government loses out on that tax as far as behavior is concerned. The behavior doesn't change. Yet your effort is to signal deterrence. To what extent do you think it works?
That's why I said it's not as if this is going to be the one pill which will solve the speculative tendencies. I'm not suggesting that it is the one and only thing which can address it, and therefore I've done it. But equally, it's also something which very many people have said, is the government going to just look the other way, even as this is going on? And if study-based responses are coming, wouldn't you want to act? Other than the regulator themselves acting. SEBI would do its own and I would do my own. SEBI 2 days ago has said, no, we don't intend doing anything at this moment. And I'm saying I have no further intentions of doing anything more. We'll have to try.
What's your assessment of the efficacy of your interventions on cryptocurrency and real money gaming? Has it had the impact you thought it would?
At least I'm trailing them, am I not? At least I know which are the ones who are going and where is it going. At least I know to track it.
But when I speak to young companies, they say, we could have had these kind of valuations, we could have built this business, it's going to geographies where it is allowed, they are making the money and we are losing out in these technologies and in these sectors.
Let's understand that. When if it is all of them are going out and I have to get them back because they are Indians, and if technology will still not defy borders, I can get them back. The same business from here with no borders because technology, or the same business going elsewhere because no borders will serve this country as well, is the truth. Technology doesn't care for your geographical borders. So in order to keep them here, I have to compromise on tax is one thing, and second, compromise on even detecting what is happening there. Automatic disclosure is not happening. People are not saying, okay, I'm going to go onto a platform and play with cryptocurrency. Are they going to say it to me?
No, but those companies will be here. Those companies, their databases, they'll be
Very
here.
well, I've heard this argument and there are still a lot of companies here, despite my TDS and TCSs.
Ladies and gentlemen, can we have a very warm round of applause as I thank Finance Minister Nirmala Sitharaman for joining us on the NDTV network and being part of this. Thank you very much, ma'am. Wish you all the best. Thank you. Thank you.
Your initial thoughts about this overhang, and I'm asking this to practically everyone I meet today, it's unique insight, on this overhang of the trade deal being, or at least an agreement being signed with the US. Your initial thoughts?
Of course, it's excited to the all sectors, including renewable energy also. Because the way we are gearing up the renewable energy sector, we need more export from this country to the another country, and all over world is looking option of the China is India. That's the main important thing.
So you're saying that India can compete with China on renewable energy?
We are only the option for the world to make a sustainable project. I say sustainable because the project of the renewable, each project is having a life of 25 years.
Okay.
Where India have the reliable partner or the reliable uh, people who can do the better project than the China. That's the thing, mainly.
When you say, I want to double click on that before we get into anything else. But when you say it's better than China at this moment, what do you mean, sir?
See, only making up wafers or the panels is not important, but the important is how to make this project to be run till 25 years.
Right.
And that's a very important thing, because it's a huge capex going inside of the renewable projects. But at the same time, 25 years reliability also public required or the people required of the world. And India is the best choice for that.
So give me some perspectives and the audience as well. If you say that a standard project, a solar plant, right? It can be used for captive power, that is for a company to set up this renewable energy capacity to feed into its own processes, or it can be created to sell to the grid, right? So commercial purposes. What is the average size of a project like this? What is the kind of capex required? And how quickly can it break even?
See, it is from 1 kilowatt to 1 gigawatt.
It's massive, right?
It's a mass.
Right.
And solar, especially in a renewable energy, where you can do the 1 kilowatt also, and then you can do the 1 gigawatt also.
Right.
Whatever you need for your consumption, you can make the project. At the same time, government also provide so many tenders from the 5 megawatt to 500 megawatt or the gigawatt size also.
So let's talk about scale, right? Because ultimately a lot of people are buying into the idea, as you pointed out, it's viable. Buying into the idea of creating at scale. But let's face it, sir, and you can give us perspective on this as well. You already said that a large part of the wafers, a large part of the panels are being made by China. And the Indian capacity is getting created, this value chain is being created, but the pricing is not matching up. So how do we reach that scale? What is the kind of investment and capacity that will need to be created in India for us to have that edge in renewable energy?
See, what we thinking is renewable energy is a solar panel or the wind machines or the turbines. But it's not like that. See, renewable energy required a solar panel means projects, then the stable grid, then the base, and the I say smart metering, or you can say the stable of the IT all connections to be lined up. These 4 items which make the renewable energy to be sustained till 25 years.
Right.
Only panel cannot do anything. Only inverter cannot do anything. But the grid sustainability also required.
Sure.
And if we want to go into the renewable energy, which we have to go because of the sustainable energy and the dollar not go outside the India and fossil fuel will be reduced, carbon print, all things.
All of those arguments are fine, but what is the capacity we need to create?
We need to create the at least 2030 as announced 500 gigawatt.
Right.
And of course, we are almost reaching to more than the half, which is a very good sign for the India. About $124 billion to be invested in the 500 gigawatt, which is again the very good capacity as an Indian, I can say, which make the India at least 50% plus renewable energy sustainable for the people.
Yeah.
But in 2070, that is again one mission is a net zero. We are growing with the 9% every year to year consumption of the electricity, right?
Yeah.
So we require more and more renewable space also.
Sure.
And the government also trying that way. We have started 2 gigawatt almost this year of the wafers.
Yes.
25 gigawatt is cell manufacturing and all.
That's you.
Yes,
KP
it's
Group.
a use. It's a use. It's not a small thing what we are doing. You see the last decade and this decade, it's a tremendous change. Last year, 50 gigawatt we have added.
Sir, but can I ask you a question? With regard to so I know that you've said it's much more than just the wafers and the panels. But ultimately, these are the key ingredients and battery energy storage systems, which everybody seems to be jumping into as well. So this capacity that you're saying that can be created to compete with China, can it be done before 2030?
Of course, it will completed by 2030, at least to feed our, reach our target, right? And then after this trade things and EU things will come. But in that meantime, we will be mature enough to compete in the renewable space like solar panels, inverters, and of course the turbines and all, where our people is very hard trying, and we will reach to the that target.
So by 2030, India as a nation and its companies will be able to compete on the global stage with China when it comes to inputs for solar and wind turbine. You're saying
Both.
Okay. On that note, ladies and gentlemen, please big round of applause. Dr. Farooq, pleasure speaking with you as always. Thank you so much for taking the time. Thank you, sir.